Okay, so good morning. Good morning, guys. It's exactly 10:28 a.m. on Thursday, the 8th, 13th, Thursday, 13th of August. So in today's class, we are supposed to tackle fundamental analysis. So let's begin what fundamental analysis is all about. So I hope you can hear me clearly. So let me add my volume. That's okay, I think. So I hope you can all hear me out. So let's begin our lesson today. I hope you can also see my screen. So today's lesson will be on fundamental analysis. This is one of the most misunderstood concepts out there. And most of the people do not understand what fundamental analysis is and how you're able to basically apply it using technical and also sentiment analysis in your trades. So just follow me through. Don't take much, right? 30 or 40 minutes. So what is fundamental analysis? Let's first go to what it is. Then we'll be able to see how fundamental analysis has shaped our markets. Because over time, especially since 2008, fundamental analysis has been big major role in our markets and even in shaping sentiment. Sentiment, basically, it's the feel of the market, or basically, are we bullish or are we bearish or are we ranging? So sometimes tend to go up, sometimes they tend to go down, and sometimes they tend to go sideways. But we need to understand there are catalysts that basically are able to be able to activate or be able to move the markets very, especially this year when COVID happened. Markets have been really moving and obeying a lot of fundamental analysis. So let's understand how fundamental analysis is, how we apply it in the market, even in the charts. We are going to see that. Then from there, we'll be good to go. So basically, it is the study of how, so fundamental analysis is the study of how global economic news and other news events affect financial markets. So it is the study of how global economic news and other news events affect financial markets. And fundamental analysis encompasses any news event. So it's any news event, social force. So social force is basically how you are able to live your life every day, your finances. Say, for example, as we head to the holidays, by the end of every year, guys tend to go for a shopping spree, or they tend to want to buy more. So that's a social force whereby there's a tendency to go for vacations and holidays. So that's one. So of course, the demand for the currency, whichever country you're in, at the moment we usually focus more on the dollar because it really moves and it's also the reserve currency out there in the world. So that is a social force whereby guys are able to always have this kind of habit whereby we are headed to holidays, everyone wants to buy something new. So that's a social force. So basically, fundamental analysis encompasses that any news events, maybe there's a report that came out, the Bank of England governor released a report on maybe consumer spending, or basically someone else, like maybe the Reserve, Jeremy Stephen Mnuchin, the Treasury Secretary, is trying to fight COVID. There's a stimulus package coming out. That is a news event. So that's the news event, social force, economic announcement. So we usually also have these economic announcements, federal policy change. That is in case there is interest rates. Sometimes the interest rates tend to be either cut or welcome, John. They're either cut or they're hiked. You'll hear terms of dovish or hawkish, either dovish or we are going hawkish. We also have company earnings. So after every quarter, a company is supposed to release their earnings. Basically, were they making profit or did they go at a loss? So most of the Q2 earnings of most of the companies most of them reported negative earnings because COVID happened and there was a big major blow for most of the companies, starting with the airline industry, hospitality industry, and so forth and so forth. But of course, the tech industries like Amazon, it was a big gain because Amazon, Netflix, PayPal, because now people tended to move more to the digital era, or basically we were able to move more to the digital side. So fundamental analysis encompasses any news events, social force, economic announcement, federal policy, company earnings and news, and perhaps the most important piece of fundamental that are applicable to the Forex market, which is the country's interest rates and interest rate policy. So I'll be helping you understand how interest rates work, because interest rates, they govern basically how the Forex market operates. So they're usually either cut or raised. And as at the moment, they were mostly cut. Guys, kindly mute your Nini. So, okay, thank you. So kindly mute your microphone. So the idea behind fundamental analysis is that if a country's current or future economic picture is strong, so if you look at, for example, Kenya or another country, US, UK, Europe, basically every country, we usually look at basically the fundamental outlook. How is the economy doing? Are jobs created? Are there loss of jobs? How are the interest rates doing? So the idea is that if a country's current or future economic picture is strong, their currency should strengthen. And then, of course, a strong economy will attract foreign investment. You usually hear things like FDI or foreign direct investments. So that basically is to mean if we are having a strong economy, basically everyone is doing well, from manufacturing, private sector, public sector, even those self-employed. At least the economy is stable and money is flowing in the economy. You usually see most of the foreign investors usually attracted to that kind of economy. So a strong economy will attract foreign investment. Yeah, Doreen, welcome. Foreign investments and businesses. And this means foreigners will have to purchase a country's currency to invest or start a business there. So for example, you have these foreigners, they come, they have a lot of money, they're interested to start or set up maybe companies or farms around here. They will not do that with their euros, or we do not do that with the dollars or the currencies they have. They'll have to go convert that currency to the local currency. And of course, the local currency of that country will strengthen, meaning, of course, the economy will also be doing well. So a strong economy will attract foreign investment and businesses. And this means foreigners must purchase a country's currency to invest or start business there. So essentially, it will boil down to something we usually call demand and supply. Demand and supply, that is, with a strong and growing economy, we will experience stronger demand for that currency, which will work, of course, to lessen supply and will drive the value of that currency up. So I hope at least now you're starting to understand how fundamental analysis work. This is one good example. For example, the Australian economy is gaining strength. The Australian dollar will increase in value relative to other economy or other currencies. And one of the main reasons a country's currency becomes more valuable as its economy grows and strengthens is because the country will typically raise the interest rates. So if things start stabilizing, right, because at the moment where we are, because back then in March and April, things were a bit sore, they were not really good. So if the economy starts doing well and it's booming, basically like guys have started, work, guys are back to work, businesses are thriving, there's more money flowing in the economy. Of course, the central bank most likely might raise those interest rates. And what they do, this is the example of Australia, they will become more valuable and hence higher interest rates will become attractive to foreign investors. And as a result, they will be buying more of the Aussie dollars in order to invest in Australia. This, of course, will drive up demand and the price of the currency will strengthen and lessen supply of it. So if there is more demand, of course, the supply for that currency will go down and demand goes up and the price will go up. So let me go through just some of the major economic events, because as I've told you, for fundamental analysis, mostly we are looking at news events, federal policy change, company policy earnings, social force, economic announcement. But the most important ones in Forex, they're usually, we have GDP. You will hear things like GDP. So gross domestic product, or basically what's GDP? When you hear GDP of a country, so GDP usually is the report of one of the very most important economic indicators. It is a measure of the overall state of the economy, the whole country, including your everyday finance, your spending, you using money, going buying bread or milk, your breakfast, your lunch, normal commodities you use every day. When you go for shopping on clothing or buying a new cow house, all of these are falling under GDP, because now GDP will take it as a whole. You and the rest, maybe 50 or so million people combined, will be able to see the relative GDP of how the whole economy is doing. So GDP is the report of one of the most important of all the economic indicators, and it's a measure of the overall state. So it is usually released around 8:30 Eastern time, or the last day of each quarter. So we usually have Q1, Q2, Q3, and Q4. That is the first 3 months is the Q1, then 3 months like that, Q2, Q3. So right now, I think I should be entering, we are in Q3, we should be entering Q4, maybe it's between September or October. So basically, GDP is the aggregate. So what is GDP? It is the aggregate or total monetary value of all goods and services that are produced by the entire economy during that quarter. So if we were looking at Q1, we are looking at January, February, and March. Q2, we are looking at April, May, and June. So that's why I was saying most of Q2, there wasn't much activity because lockdown happened, and you know what happened between March and April. And when lockdown happened, COVID hit, and most guys were at home, economies were not moving, cars were all packed, planes, ships, nothing was moving. There was no demand. And that's why even prices of things like oil had to hit the negative territory. But we are going to be going to that so that I explain more. But I need you to understand, for GDP, this is the aggregate total monetary value of all goods and services produced by the entire economy during that quarter. And this does not include any international activity, however. So anything outside coming in, like, for example, imports or something like that, that will not be measured. But we are looking at the total monetary of all goods and services that the country is using. So kindly, guys, mute your microphone so that we can continue. Yeah, thank you. Then we have trade balance. So what is trade balance? Trade balance is a measure of the difference between imports and exports. So we have handled GDP, but now this is another very important economic indicator that is able to show us how basically the market will move. It is a big mover because a country has to produce imports and also exports. And a country, we are looking at producing more exports than imports. So that means you should be selling more out there than you're buying. So trade balance usually is the difference between imports and exports of tangible goods and services. So we have physical goods. For example, our country, Kenya, exports coffee, tea, horticultural products, I think also a little bit of livestock, but we'll import more of maybe machinery, for example, computers, cars, and what we cannot physically produce here. So for trade balance, the level of a country's trade balance and changes in exports versus imports is widely followed by an indicator of a country's overall economic strength. So if you're buying more, for example, just a minute, sorry. So for example, if you're selling more than you're buying, I mean, if you're buying more than you're selling, you'll have a deficit. If you're selling more than you're buying, you'll have a surplus. Of course, you'll be making more money. There's usually that difference. So I need you to understand the level of a country's trade balance and changes in imports and exports versus imports is widely followed by that indicator. Then we have CPI. CPI is usually Consumer Price Index. And for this one, it is used to measure the change in the cost of a bundle of consumer goods and services from month to month. So this is anything that a consumer consumes, or anything out there that you use every day: bread, milk, water. All these, they fall under CPI. It's usually an index that is able to measure how the overall, the overall measure. So we also have producer PPI, Producer Price Index. So in contrast with CPI, PPI measures how producers are receiving for goods, while CPI measures the cost paid by consumers. So basically, producers, what they are producing, consumers is what they are consuming. That's the difference between CPI and PPI. Then we also have employment indicators. Employment indicators, we have like NFP. So this class is usually long, but I will end it at employment indicators, because for employment indicators, we usually have the value of how many people are employed versus unemployed people in the labor market. So when you do the difference between that, you're able usually to see the overall health of the economy. How many people can afford at least to have an income every month, or how many households can afford an income every month. So now I'll go to the charts so that at least I don't bore you guys so much, with the theory. So let me go to the charts. And under the charts, I'm going just to look at the dollar for today and what happened, the impact that there was on on Friday. So Friday we had NFP, and most guys have been asking me, how do you trade NFP? So for NFP and the rest, I'm just going to look at the dollar index. So this is the dollar index. This dollar index usually is able to measure how the dollar is performing. So this was on Friday. It was around, let me put it on H1 so that you can see. This is Thursday, Wednesday, Tuesday, Monday, then Friday. So the NFP was around here. So around 1.8 million jobs were created. And when that happened, you can see there was a big gain on the dollar. So any pair that you are trading on the dollar, that includes USDN, USD Chef, and anything that had the USD here as the base. Let me admit more people. So anything that you had, anything that you had on the dollar gained. And then another thing I'm going to show you is that you can always check the calendar. So let me show you the calendar. The calendar is whereby we are able to know what is happening. Basically, what is happening out there. So let me open the calendar so that at least you can see what happened this week. We'll have a continuation of class, not to worry, guys. So because fundamental analysis is a very, very broad subject. So, and also you can ask questions as we continue. You can always, pause, leave me a message down here. So just a minute. Oh yeah, here, this is the calendar. Yeah, I have, yeah, it's here. The Forex Factory. So there's also investing.com, Bloomberg is there. There are so many, but for me, I usually prefer using the Forex Factory because what it does, at least I can be able to know within the week what will happen. So let me open it. Just a minute, guys. So for last week, we had NFP. Then there was also another big impact on gold. I think there was a big sell-off that was caused by that rise of jobs, because when dollar is gaining, most of the time gold is losing. When gold is gaining, dollar mostly is losing. They're always correlated because at least gold is usually pegged to the dollar most of the time to always know what is happening. So let me open my calendar here. 1 minute, guys. So you can always ask questions. So, but I want you to understand fundamental analysis mainly is the news events, or is usually what's happening on the news. So just a minute. So this was the dollar. The euro also has been gaining. So let me also go to the euro and the pound as I open my Forex Factory. So a minute. So this has also been the euro. Yeah, you can see even this week, even today, it's gaining. So for the euro, when COVID happened, let me show you what really happened. So when COVID happened, this was the SNMP. So the big sell-off happened around February 20th, around here. So when that sell-off happened, that was to mean the lockdown happened, demand was not there. This was the rally on the stock market because S&P 500 is usually basically to gauge how the stock market of the US is doing. So, and after this big sell-off, there was a rebound. And you can see now it's almost coming back to 50%. At least it's almost, coming back to where we were at February. It's February high. So just a minute, I think, oh yeah, my Forex Factory has opened. So a few minutes. Yeah, it's here. So at least yesterday we had consumer price index. You can see here. So we usually have the previous, then we also have the forecast, and we have the actual. So today is when? Today is Thursday. So at least now let me go back to what has happened. So we can see there was also NZD monetary policy. So what you usually do, you just usually check the outcome. You see around this area, we have the previous, we have the forecast, and the actual. If of course the value is greater than what we had, that means if the value was greater than the forecast, of course, we have better results or better than expected outcome. So at least this week, I don't think we also have much apart from what happened. So for the sell-off that happened on gold, of course, it was because of NFP. There were jobs created, the dollar gained, and also Trump decided to, have some talks on capital gains tax. So all the corporates and what they are making, he was thinking of introducing a capital gains tax, and that's why that sell-off happened. It was one day, I think the the day after, that was on Tuesday. There was a big sell-off on gold, and of course we made money going down and we also make money going up. So this is the calendar. So I'll be going through with you guys on the next class more practically, as I also send you guys this ebook. I'll send you the ebook whereby you guys can be able to go through all these fundamentals, because there's a lot we'll have to learn. So I think I'm seeing some question. Let me see before our time lapses. So a second, guys. So basically, that's what it's all about. So today I wanted just to give you guys a little bit fundamental. You can see also the pound has been gaining. And for the euro gaining, it was because of the stimulus package. They pumped in, I think, an extra 70B. That was, no, 759 billion euros, you know, because of COVID and what happened. So basically, I think that is what have. So for now, guys, I think I'll stop it at that because of time. But now, this was just an introduction of what fundamental analysis is all about. So I'll take you guys through another class. So I hope at least on Tuesday, you can also be available, because I'll be wanting to take you guys through, you know, more of these sessions or more of these trainings now and then. So for today, I'll leave it at that because of time. And let me answer these two questions. I think we had two questions here. So 1 minute, guys. I think we had two questions. So this was the introduction, because there's a lot. And I'll also, you know, invite you guys to, we usually have these Zoom sessions every week, and we are planning, even possible, we can have them 2 or thrice, or even on Saturdays, when you guys can be able to be available. So I would like to be taking part of your class every time you meet. Please add me. So at least I'm seeing guys here are interested. 937191. Okay. Do you bank holidays? So bank holidays, they are not usually affected. So thank you very much. So let me guys continue next time, because today was just my introduction, and I needed you guys at least, you know, to be able to have a rough idea of what we are doing. So for today, thanks guys for your time, and I'll be talking, or will be continuing with this class on Tuesday, because there's a lot to learn. So at least for today, we have done employment indicators, trade balance, CPI, PPI, and also the interest rates. But I'll be explaining more of how they work. So Tuesday, at least by the same time, 10:30, I hope you guys will be all live, so that at least we can continue.